Welcome back. Here is the fourth headline for the day. Adani Group stocks remain largely under pressure. The group has now lost more than 10 lakh crore in market capitalization in just over 3 weeks. Adani Enterprises regained some lost ground after reporting a 42% jump in revenues. Vaishta is here with the fine print.
Well, Adani Enterprises had released their numbers today in the market hours. In fact, a very good set of numbers coming in. The revenues have jumped by 42% on year-on-year basis. The EBITDA is also up 111%, while the margins have improved to 6.1% in Q3 of FY23, which is to be compared with 4.1% in the same quarter of last year. In fact, even on the bottom line, it is profit making at 820 crores, which is to be compared with a net loss of about 12 crores in the same quarter of last year. When we compare the numbers on a 9-monthly basis also, the numbers look pretty decent. In fact, the revenues are up 137%. The margins have come in at 5%, and the bottom line has grown more than 200% and has come in at 1,750 crore rupees.
Hearing the Adani case, the Supreme Court has asked the government and SEBI if a proper framework is in place to protect retail investors. The Apex Court has also suggested setting up an expert panel. Ashmit is here with the details.
Right, so what we understand essentially is that the Apex Court is seized of the matter now. Importantly, what's interesting is that a third application has been filed before the top court, this one by Congress member Jaya Thakur. What she's essentially seeking is threefold. Number one, an investigation into the Adani Group of companies on account of corporate governance issues red flagged by the Hindenburg report. That's one. The second aspect is a demand for a probe into LIC as well as the SBI for subscribing to the FPO. Essentially, what the plea is arguing before the top court is that these companies opted to apply for the FPO at price levels of around 3,200 when the same shares were available in the open market for as low as 1,800 rupees per share. That's a concern. The third concern that has been red flagged in this petition is the exposure that banks have. The petition pegs it at about 82,000 crore rupees and then goes on to say that these loans were issued on the back of inflated share prices as well as limited or no due diligence. And finally, there's also a concern that's being expressed with respect to investor wealth erosion, saying that the crash in Adani stock prices has led to capital erosion of nearly 10 lakh crore rupees. Now, all of this comes on the back of submissions being made by the Solicitor General on behalf of the government, wherein the Solicitor General had clarified in as many words that, number one, they are looking into the matter and understanding and trying to examine whether or not there is any need for surveillance or enforcement action vis-a-vis Adani Group of companies. Also going on to say that the current framework in place for investor protection is in fact sufficient to address any such anomalies. And third, saying that if at all an expert panel is constituted, the scope should be very, very limited. Now, these were the concerns being expressed by the government. The Apex Court will take up this case for further hearing on Friday.
Thank you very much for that. Moving on, Mark Mobius of Mobius Capital believes the Adanis could have done a better job on governance. Speaking to CNBC-TV18, he also added that the Adani issue is not of concern while looking at the Indian market. Listen in.
The Adani thing is not really very important from our point of view in terms of looking at India, because first of all, that situation was not a very serious problem in terms of corporate governance. Yes, they could have done a better job in corporate governance, gave the world a notice that India has large companies and companies that are able to raise an incredible amount of capital. So on the one side, it's quite a positive message for India, although maybe not the right one in the long term, but in the short term, I think it's been a good one.
Interesting conversation there. Let's get to the fifth headline then. Oil prices soften after United States said it will sell more crude from its strategic reserves. Also, restarting of exports from Turkey's Ceyhan port also weighed on prices. Manisha is here with the details.
Well, it's been higher highs for the crude oil prices. We did see $87 a barrel as well for the Brent crude oil prices yesterday. Some profit taking from those kind of levels as markets are reacting to the supply concerns easing off. To begin with, you have the US announcing that they are going to release 26 million barrels of crude from the Strategic Petroleum Reserve. This is over and above the 180 million barrels that was released in the previous year as well. To add to that, the market also is looking at the Turkey ports resuming operations after the earthquake, which did lead to operations shutting down for almost a week. So that supply concern or the premium also is off from the market. And then it is also about the US inflation data that the street is awaiting at this point in time, the strength in US dollar as well. The market also are looking at the China demand on whether or not it is sustainable and whether it consolidates, because in the last month we didn't see manufacturing data or the Chinese imports continue on the higher side. So few factors that the street will watch out for. In addition to that, the US weekly inventories as well, where we have seen 7 straight weeks of build-up. On whether or not the 8th week also shows you an upsurge in case of inventories is something that could put pressure on prices. But having said that, after nearly 7.5% of gains in the previous week, we are trading in the positive for this week as well.
Manisha, thank you very much for that. Moving on, the Directorate General of GST Intelligence has sent notices to about 10 to 12 mutual funds. Sources have told CNBC-TV18 that the DGGI has alleged that these mutual funds wrongly accounted for scheme costs as capex costs to claim input tax credit. Timsi is here with the details. Timsi.
Well, sources are clearly indicating that when it comes to mutual funds, about 10 to 12 mutual fund houses have been sent notices, or to be precise, letters of inquiry to explain the ITC claims that they have made in the year 2017 and 18. And this is with regards to the ITC that they have claimed on account of, expenses that were capped at 2.25% of AUM. And what the government now feels that these mutual funds, they wrongfully claimed ITC by billing excessive expenses under capex, which is outside the purview of the prescribed norms. What we are given to also understand is that the total quantum of evasion that has been initially now identified by the DGGI is to the tune of between 125 to about 500 odd crore rupees, because a lot of these claims and a lot of these allegations could be challenged. So thus DGGI is keeping a low profile right now. But yes, Mumbai zone of DGGI has sent these notices, waiting for details. In some cases, realizations have also happened. But yes, about 10 to 12 top mutual funds right now under DGGI's radar.
Timsi, thank you very much for those details. With that, it's a wrap on this edition of Markets Today. Thank you for watching.